Ladies and gentlemen, good day and welcome to Alkem Laboratories Limited Q1 FY27 earnings conference call hosted by Motilal Oswal Financial Services Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Tushar Manudhane from Motilal Oswal Financial Services Limited. Thank you, and over to you, sir.
Thanks, Yusuf, and sorry for the delay in the start of the call. Good evening, everyone, and warm welcome for first quarter FY27 earnings call of Alkem Laboratories. From management side, we have Mr. Sandeep Singh, Managing Director, Mr. Nitin Agarwal, CFO, and Ms. Purvi Shah, Head of Investor Relations. Over to you, Purvi.
Thank you, Tushar. Good evening, everyone. On behalf of Alkem Laboratories, I welcome you all to our Q1 FY27 earnings call. Earlier today, we announced our financial results along with the press release and investor presentation, all of which are filed with the stock exchanges and are also available on our website. We hope you have had an opportunity to review them. Before we begin, I would like to remind everyone that this call is being recorded and the audio recording and the transcript will be made available on the stock exchanges and our website shortly after the conclusion of the call. Please also note that today's discussion may include certain forward-looking statements, and these statements should be viewed in conjunction with the risks and uncertainties that are associated with our business and the environment in which we operate. With that, I now would like to hand over the call to our MD, Mr. Sandeep Singh, for his insights. Over to you, sir.
Thank you, Purvi. Good evening, everyone. Thank you for joining our call. The period under review has been one of continued execution of a strategy. While the operating environment remains dynamic, we have stayed focused on the fundamentals, strengthening our core business, improving operational efficiency, and investing selectively in areas that can support a sustainable and profitable growth. We are encouraged by the progress we are making across these priorities. At the same time, we remain conscious of external challenges and are maintaining a disciplined approach to capital allocation, cost, and risk management. I will briefly walk you through the key developments and our outlook, after which we will be happy to take questions and engage. The key highlights are that our revenue from operation was 3,740 crores with a year-on-year growth of close to 11%. India sales were 2,497 crores and year-on-year growth was 10.3%. International sales was 1,222 crores with year-on-year growth of 16%. EBITDA margin was 20.5%. The growth was 3.7% year-on-year. R&D expenses was 4% of our total revenue. Profit before tax was more or less flattish, technically 1.8% of growth. And the net profit, there was a degrowth of 21.7%. This is purely because of taxation reasons, and I'm sure our CFO will deep dive into this later on. According to IQVIA data, the company registered a growth of 13.2% year-on-year versus the Indian pharmaceutical market, which grew by 12.2%. This is a 100 basis point outperformance, just as we had guided you earlier. Acute segment reported a growth of 12.3% versus the IPM, which grew by 10.1%, which is a 220 basis point outperformance. Chronic segment reported a growth of 17.9% versus the IPM, which grew by 15.4%, 250 basis point outperformance. We have outperformed IPM in 7 key focus therapies. Anti-infectives grew by 1.1 times of the market. Gastro grew by 1.2 times of the market. Vitamins and minerals grew by 1.4, pain by 1.8 times, anti-diabetic 1.4, and respiratory 1.6. and last but not the least, Derma 1.6. During the quarter for the US market, the company received 5 ANDAs approval. One of them was a tentative approval. Recently, our Daman facility has received an OAI status. We have already initiated comprehensive corrective and preventive actions and remain fully engaged with the regulator to address the observations. While this represents an important regulatory development, approved product supplies from the facility continue to the US market without any interruption. With this, I open the floor for Q&A. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and two. Participants are requested to use handset while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. First question is from the line of Sayan Mukherjee from Nomura. Please go ahead.
Hi, good evening. Sandeep, you mentioned about growth in India higher than IQVIA market growth as per IQVIA. We have seen some improvement in growth rates, but at 10.3% is lower than most of the pharma companies who have reported so far. Can you throw some light around the dynamics here? What do you think is impacting the growth rate in India? And is there something that would ease to improve growth rate in the quarters?
Yeah. So I think the India growth rate is kind of dragged down because of the trade generics. Trade generics growth was flattish to a very mild growth. And trade generics now contribute reasonably to our domestic formulation. So that drags it downside.
Okay.
Sorry,
And you
yeah,
branded again, what
Yes.
was the branded growth this quarter? Branded generic?
It was 12%. 12. 1, 2.
Okay. Nitin, on the costs have gone up. I mean, you had, I think, guided earlier, employee cost and other expenses are on the higher side. So if you can, indicate how much of the cost is on account of CDMO medtech, which might not be contributing at this point, or for that matter, if you can talk about the EBITDA loss from these businesses in this quarter.
Sure, Sam. So in terms of employee cost, yes, the growth is more than 16% in the quarter. There are 2, 3 reasons. One is definitely the annual increment. The second is we have added around 1,200 MRs in last few quarters. So that also impacted the employee cost. And the CDMO business in Engine became operational from November 25. So that was the third impact on manpower. In terms of other expenses, yes, there were expenses on account of Engine CDMO business. Plus the conversion rate for dollar has increased, which has also benefited us in terms of top line. But the impact is also on other expenses where all our subsidiaries, foreign subsidiaries expenses got converted at a higher rate. It's almost 10% higher than the last year rate. So these were the reasons. MedTech, yes, we have completed the acquisition of Occlutech, but that was in mid of July. So our quarter one numbers were not impacted because of Occlutech. Yes, the ortho business which we acquired, but I think it's small in scale. At consolidated level, the impact is not that high. But just to share the numbers, there was between, you can say, if we exclude the due diligence cost and all of Occlutech, there was a EBITDA loss of around 5 to 7 crores because we are also investing into this business. We are filing our products outside India. So definitely this business will break even maybe in next 12 months, but the scale is small. Like at yearly level, we will do around 50 crores of sales from the ortho business other than Occlutech.
And the US CDMO operation, Nitin, I mean, how much is the drag from there?
US, we incur around 60 crores of operational expense. So definitely it's a new business. So we plan to break even in next, say, 4 to 5 quarters. Uh, But yeah, for the quarter, it was around 60 crores from US.
Okay. Thank you.
Thank you. Next question is from the line of Sandeep Kumar S. from Clentus. Please go ahead.
Hi, thank you for taking my question. So the first question is on what is the current status of denosumab biosimilar in the US?
Yeah, so denosumab biosimilar approval is a little bit off. So we did not get the approval on the goal date. So that is pushed off by at least a few months.
Okay. So then my second question is on the EU region. So on the following the approval of OSCE, so are there any specific targets like region markets where the launch is being prioritized, or is like full EU availability expected simultaneously?
Okay, no. So sorry, I didn't get you properly. You're asking about denosumab Europe plan, right?
Yeah, OSCE Prolia biosimilar. So is there like only specific regions
Prolia.
we are targeting or Prolia?
Okay. Yeah, we have your usual suspects. So we have a partnership with a company called Theramex. So they are our partners. We are not doing it directly. And as you know, it's very competitive. So there are many players even in Europe, just like US. So it's not going to be a very meaningful ramp up for any one of us for some time. So it's not something very significant. Yeah.
Okay. So my last question is on the recent opinion on Xgeva biosimilar. So when can we expect the launch of Xgeva biosimilar in the Europe?
We could be like 3 months away.
3 months. Okay. Thank you for this update. Thank you.
Thank you.
Thank you. Before we move to the next question, a reminder to the participants to ask a question. You may press star and one. Next question is from the line of Amlan Jyotidas from JP Morgan. Please go ahead.
Yeah, hi, sir. So my question is regarding the India biosimilar front.
Sorry to interrupt, Amlan. There is a background noise coming from your end.
Yeah, is it all right now?
Yes, please proceed.
Yeah, so my question is regarding the India biosimilar front. You had some 6 to 7 odd biosimilars in India launched through the India entity. How has this portfolio done over the since launch, and what has been its contribution to the India revenues per se?
Yeah, Nitin, you want to take that? You know the percentage better.
So we have already launched 7 products, as you said, and we do around 150 crores of annual sales. So I think we have done really well, and because of this backward integration, the margins have also improved for these products at consolidated level.
So, sir, this revenue is a part of your India revenues, is it?
Yes.
Okay. Then next on Oxlotec. So, sir, since you have closed the deal in July this year, how do you see the growth for this business as a whole going forward, and how do you see the margins spanning up? I remember you guided to some reaching 10% margins in the near term. So does this guidance hold still?
So this year, see, the original plan was to complete the acquisition and start integration sometime in first quarter, but that got delayed. So we just completed the acquisition in mid of July, and we have started the integration. So this year, for around 8.5 months, our target for Oxlotec is around 400 crores of sales with break-even EBITDA.
Okay.
Because of delays happened in case of integration. So yeah, it will be a bit off from the guidance we gave last time.
Okay. And sir, how should you see this margin going ahead, say in the next 2 to 3 years?
So Every year you'll see a gradual improvement in margins. And as we discussed during our investor meet, that a lot of the integration with India operations will start kicking off from next quarter. But yes, you can see say 7 to 8% improvement in EBITDA year on year, and we target to achieve our guidance over 3 to 4 years. Yes, but it will be a very healthy EBITDA business for us within say 3 to 4 years.
Okay, sir. And so lastly, if I may squeeze in, from this OAI unit, the Daman unit, could you share the percentage of revenues from this unit to the US, if it's available?
I think 45% of our US revenue comes from this facility.
And so all of these revenues, or all of these products are still in supply?
Yeah, very much. Yes,
Okay, sir.
absolutely.
Thank you. Those are my questions. Thank you.
Welcome.
Thank you. Next question is from the line of Kunal Dhamesha from Macquarie. Please proceed.
Hi, thank you for the opportunity. Can you throw some color on why the trade generic business is not growing? Is it industry dynamics? Is it company-specific dynamics?
I think it's a combination of both. It has got very intensive, the competition. 4 or 5 years back, you will remember that many companies wanted to play in this segment, but now a lot of big guys have entered. And also it's internal because, at a large number, law of large numbers always kicks in. We are maybe the number one or number two in this segment. And we also tightened our market practices slightly, where we are little strict on the number of days outstanding. So therefore, it is leading to this.
Yeah, and
Okay.
from Jan
Yeah. Nitin, go ahead.
if you look at our numbers for Jan to June quarter, Jan to June period, we did well in terms of growth. But yes, from April to June, there were some strategic calls taken on outstanding DSOs and all. And also we have bit increased our prices because of increase in API prices. So I think the inventory levels in market may have also gone down. So in coming quarters, the primary sales or the sales from this business should recover. And the lower growth which we saw in quarter one, I think in the upcoming quarters, the growth should be higher than that. So Jan to June, we did well in trade generic, if you look at 6 month numbers.
And sir, well means double-digit growth. How to put that into some form of quantification?
So it was higher single digit.
High single digit. Okay. Okay. And then we are saying April to June was flat on a year-on-year basis.
Yes.
So Jan to March
Almost.
would have been double digit.
Yes, you can say that.
Okay. Secondly, on the CDMO business drag of 60 crore, right? That number looks quite big. So basically, what's the...
Yes.
This is annual or quarterly?
This is quarterly.
And this is not, this is expense for CDMO, US.
Okay. So let's say for us to become break-even in the next 12 months, what kind of revenue we need to generate? And then in terms of the pipeline of projects, do we have that
Yes.
visibility now?
No, good question. So next 12 months will not break even, just to be very clear. For US, you will not break even. That's number one. The revenues, what we need perhaps will be close to $20 million to break even.
Sir, I didn't get your number. Sorry. $12 million?
No, I said $30 million. Sorry, I said 20, but actually it's 30. At
30.
25 to 30 million, we'll break even over there.
Per quarter?
Yes. No, annualized.
Annual. Okay.
Yes.
Okay. And for that, what because the CDMO is a pretty big spectrum, right? So which is the part that we are initially targeting? That would be helpful to know.
As Enzene is into monoclonal antibodies, so precisely that. We are just into MABs, and we do the development to clinical trial supplies and hopefully commercials in the future. But right now, these are most of the time clinical trial batches and development batches.
Sure. Sure.
Yes.
So let's say for that 30 million run rate, would you be like, how many projects do we need to be working on?
No, no. So all that we know, so it depends. Some projects are pretty large, so it's not the number of projects. I think we got a decent pipeline. A CDMO has a sales cycle very different from what we traditionally do as, branded pharma. So I think we'll have to be patient over there. And the cycle time is pretty large, and to work with these companies who could be innovators, not necessarily large pharma, even small biotech, they take their own time, and it's dependent on a lot of things, how well they get funded, how the clinical trial progresses. So I think it's a mixed bag where patients would be rewarded. And just like I'm sure you all track a lot of CDMO companies, you all know that. So we cannot measure it with the same tape which we measure the traditional Alkem Pharma or any pharma. But we are positive, therefore we have put the facility.
Sure. And sir, lastly, let's say, what type of capacities do we have there? Is it currently more R&D related, and then eventually would it require for us to put some kind of capital expenditure?
Yes. So we have reasonable capacity. We are not very big. We have small capacity, but our technology is a little different. So if I tell you in KL, that will not really do justice to what we can produce over there. And second part, at some point of time, it will require CapEx to happen over there as we ramp up. Because without it, we'll not really get economies of scale, just like any API/CDMO or biotech business.
Sure.
Yeah.
And
But that would not be this year.
Yeah, and this facility is GMP compliant? Like USFDA
Yeah, of
approved?
course.
Okay.
It is not USFDA approved because that has to get triggered, but it is absolutely in US, and we are working with a lot of good companies, and we'll have to trigger the USFDA.
Okay. Which will happen with some of the client when they file, etc.
Yeah. Absolutely,
Okay.
sir.
Okay.
Yes.
And last question on the US plant. We said the revenue contribution is 45% of US.
Of the month.
The month, yes. What's the
Yes.
number of pending ANDAs, and what's the total pending ANDAs right now?
Of the month, we'll come back. We don't have the exact number. We'll come back to it.
Okay.
Yeah.
Okay.
Purvi, maybe you can come back.
Okay.
Yeah.
Okay. Thank you and all the best.
Thank you.
Thank you. Participants, if you wish to join the question queue, you may press star and one. Next question is from the line of Kunal Randeria from Axis Capital. Please go ahead.
Yeah, hello. Good afternoon. So first question on the India business. Last year, you made a foray in orthopedics by making a couple of small acquisitions. Would you still be kind of looking to expand this business, or would you rather wait until maybe a CEO is appointed? Last year you had made a couple
in India.
in India. So just I just repeat my question.
Okay. Sorry. Orthopedics, we have not acquired anything. This is the medtech you're talking about, medical tech.
No.
Medical devices.
No, sir. You had acquired a couple of small companies, right? Bombay Ortho and.
No, Bombay Ortho is medical device, sir. It's not your prescription pharma. It's not pharmaceuticals.
So, my bad. Apologies. So would you be kind of still expanding into this, or would you be kind of waiting for maybe someone new CEO to join and then see how to expand?
No, depends. So we are not looking to acquire anything in orthopedics or medtech right now. So that's the first thing. Yes. So there's no question of waiting or not waiting. I think it is very early. The ramp up is happening, and there's no need to acquire anything over there right now. Yes.
Right. Okay. Sure. So, but any plans? Now we have 5,700 crores cash. Any plans that you would like to share?
No, nothing. Everything is the same like before. Nothing changed from last quarter.
Okay, got it. And just one more. Would you be launching Tolvaptan in the US, generic in the US this quarter?
Yes,
okay.
Sir, we would be.
Okay, perfect, sir. Thank you and all this.
Thank you.
Thank you. Next question is from the line of Abdul Qadir Puranwala from ICICI Securities. Please proceed.
Hi, thank you for the opportunity. So my first question is with regards to the trade generic business. So understand, it had got impacted because of your receivable policies or your credit period. But we have been the business has been growing at a slow rate for the last couple of quarters. So any timeline you would like to share with us by which you expect, growth in this particular segment to bounce back?
No, as bounce back, what does bounce back mean? So, like, how much do you think we should be doing?
Say at least in line with what your branded pharma business is growing?
No, that's very hard.
Okay.
So then we don't want to see also it's like a matter of discipline. We'll have to reset it and we'll have to figure things out and we'll see how the market also evolves. So I think personally as the promoter MD, I'm happy with late single digits. It's perfectly all right. We just need execution and discipline in that business more for the next 1 to 2 years.
So there is no capex requirement there. ROC.
Yeah, ROC is good because the CFO always reminds me that. So yeah, we'll have to be careful on that. Yes.
Sure, sir. Got it. And so my second question is with regards to any thoughts on hiring a CEO.
Yes. Yeah.
So
we told you last time we are looking out. So thoughts are the same, and hopefully next time when we have the quarterly meeting, he'll be there with you. So we are looking out, sir. As you know, it's a critical hire. We can't hurry up. But we are looking out, sir. It's very clear. Yeah.
Got it, sir. And just a couple of bookkeeping questions. So for the tax rate, I think last quarter we had guided for a 27 to 28%. Are we still kind of maintaining that for the full year?
See, that was for standalone, but in consolidated level, it will be in the range of around 30 to 32% because few of the entities like our SA, Engine US and all, which are reporting losses, and currently we are not creating deferred tax asset on those entities, because of which our consolidated tax rate looks a bit higher as compared to standalone. So at consolidated level, it will be in the range of 30 to 32%.
Understood, sir. Thank you and all the best.
Thank you. Participants, if you want to join the question queue, you may press star and 1. Next question is from the line of Tushar Manudhane from Motilal Oswal. Please go ahead.
Yeah, thanks, Yusuf. Sir, just with respect to the India business, could you share price, volume, new launches growth for the quarter?
So in terms of price, the growth was around 6%. This we are only talking about other than trade generic business. New launches was around 3% and volume was around 2%.
And so in general, the industry growth rate have sort of improved over last, I would say, few months. Any change you've seen or experienced which is sort of driving this growth, and how sustainable you think these numbers are in terms of overall IPM growth? May it be chronic, may it be acute?
No, so according to us, I think there's nothing dramatically changed. I think, the semaglutide has gone off patent and so those kind of things are driving chronic, I think, by and large. And so we think it's quite sustainable, whatever we are doing at least.
Got it. And how much benefit would have got from semaglutide for Alkem Lab?
It's very small right now, sir.
15 crores.
Yeah, small. But we are among the top 3 in generics. I can share that with you.
Got it. And so just secondly on US CDMO, this OPEX, how do you see this over full year 27? Will 60 crores for first?
Yeah, you can analyze that. OPEX will remain the same. We'll have to get business, and that's how we can break even and eventually make money. We can't cut OPEX too much because the complexities of a US plant.
Got it. So some business opportunities got pushed, which is why the break even is sort of little taking time, or this is where the way it has been sort of tracking.
Well, I think it's a combination of both, because sometimes reality comes and delays things. So I think we knew that it's going to be expensive and business would take tough, but is taking more than, let's say, a couple of quarters to reach what numbers we were targeting. And also, CDMO is a lumpy business, as you know, so when it rains, it pours kind of things. Whenever it comes, it will come big, we feel.
Got it. So the new contracts probably there, which is where the efforts are, so some gestation period to sort of get the fruits of that.
Yes, absolutely.
Thanks. Thanks a lot for answering my questions.
Welcome.
Thank you. Next question is from the line of Rashmi Shetty from Dalit Capital. Please go ahead.
Yeah, thanks for the opportunity. Sir, just on the US part, if we convert into the, dollar business, in constant currency terms, we see some softness in the US sales during the quarter. So if you can specify the reasons for that, both on YOY and quarter-on-quarter, I'm seeing that. And earlier we guided that, for the entire year, US will be in high single digit. So now, after this quarter, what is your outlook? Also taking into consideration the Daman plant OAI.
Yeah, so I think the last thing I'll answer first. I think Daman plant OAI is a concern, but we don't see it as impacting our business because, nothing is stopping and tolvaptan has kind of gone through. So we feel confident that this year would not be impacted. Also, we believe that we'll come out of this in 6 to 12 months' time, hopefully. So Daman should not have an impact on business this year. And I think the price NRV erosion was just close to flattish. So price erosion has kind of bottomed out, we feel, for us, and maybe for the industry, I'm not sure. So US is challenging. We really don't have volume growth. It's more because of currency, and that remains a reality.
And new products.
Yeah.
So you mean to say that you have not seen any major volume expansion in the products which you all have launched last 12 to 24 months?
I would say so. That's a fair assumption. Yeah.
Okay. So then what will be the outlook for the whole year? Still we maintain our guidance of around high single digit?
Yeah,
or you
yes,
feel it
I
will
think
be
we can.
flattish?
I think it will be high single digit to mid.
Okay. Mid to high
I think
single digit.
yeah, and we'll be helped by currency for sure.
Okay. And this $30 million revenues, which we are expecting from the CDMO business, when can we anticipate that, in which year, by which year we can expect the revenue to kick in?
27, 28.
FY28.
Yes.
Okay. And again, on the India business, put together trade generic business and the branded formulation business, what kind of growth can we expect for the entire year?
Round about what we told it last time, but we could better that by, let's say, 100 basis point.
So you feel that in the subsequent quarters we'll be able to cover it, whatever growth we have lost in the trade generic business, and branded formulation will continue to perform. Is that a right assumption?
Yeah, we could end up by close to 12%. Yes.
Okay. Thank you, sir. That's it from my side.
Welcome.
Thank you. Participants, to ask a question, you may press star and one. Ladies and gentlemen, anyone who wishes to ask a question may press star and one on the touchtone telephone. Next follow-up question is from the line of Amlan Jyoti Das from JP Morgan. Please go ahead.
Yeah, thank you, sir, for the follow-up. So, I remember a couple of years ago, you mentioned in your annual report that you are focusing exclusively on the non-US markets in international business. So has there been any significant development in that? So this double-digit growth that we're seeing, how sustainable do you think this is?
So this is quite sustainable, more than sustainable. Yeah, we are seeing good double-digit growth, and this would continue.
That you would like to highlight?
I mean, see, the thing is, US is so big that everything else, even if they grow very high, it will not really move the needle for the next few years. But there are some countries on a low base, they continue to grow in very, very healthy double digits. But they're on
sir.
small base. So like Germany, it grows by 35-40%. But so small that I don't feel like talking too much about it. Might not be a good use of our time right now.
Even in Chile and Australia, we did well.
Yeah.
Chile and Australia both are big markets for us, and we have been doing well in this.
Okay, sir. So, and my last question is on the gross margins. We see an improvement on the gross margins this quarter. So, sir, any particular reason for this, and how do you see this margin sustaining in the near term in FY27 and 28?
So in quarter one, there were three, four reasons. One is that, as we discussed, our trade generic, the growth was lower, and our prescription business did really well. Then there was also impact on account of currency, because US and other markets, even in Australia also, the currency supported us. So overall, the mix was better for us because of lower trade generic business, and also support from the currency side helped us. For the full year, we maintain the same guidance because there may be some impact on account of API price increases, which we have already seen. But since we had old inventories at old rates, so the impact was not that high in the current quarter, but in subsequent quarters, there will be impact because of API prices. So we maintain the same guidance of 66.5 to 67% of gross margins for balance part of the year.
Got it, sir. Thank you, sir. Thank you very much.
Thank you. Ladies and gentlemen, as there are no further questions from the participants, I now hand the conference over to the management for the closing comments.
Thank you, Yusuf, and thank you everyone for joining today's call. Should you have any follow-up questions or require any clarification, please feel free to reach out to us. Thank you. Have a pleasant weekend as well.
Thank you, ma'am. On behalf of Motilal Oswal Financial Services Limited, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.